What if I told you that the difference between someone making $50,000 a year and someone making 50 million isn't talent, luck, or even intelligence? What if the real difference was something far more fundamental, something that happens entirely between your ears? Today, we're diving deep into the wealthy mindset, and I'm going to show you exactly how financial geniuses like Elon Musk think differently about money, risk, and opportunity than 99% of the population. But here's the thing that's going to blow your mind. Most people think wealthy individuals are just greedy or obsessed with money. That's completely backwards. The wealthiest people I've studied actually think about money less than broke people do. They think about it differently. And by the end of this video, you're going to understand exactly what that means and how you can start rewiring your own brain to think like a financial genius. Before we jump in, let me ask you something. When you hear the name Elon Musk, what comes to mind? Electric cars? Space exploration? Maybe you think about his net worth or his Twitter antics. But here's what most people miss. Musk isn't wealthy because he invented cool technology. He's wealthy because he thinks about problems, solutions, and value creation in a completely different way than everyone else. And that's exactly what we're going to unpack today. I'm going to break down the core mental frameworks that separate the financially successful from everyone else, using real examples from Musk's journey and other financial giants. By the time let's start with the first principle that changes everything. Most people think about money as something you earn through time. You work 40 hours, you get paid for 40 hours. You work more hours, you make more money. This is linear thinking, and it's exactly why most people stay stuck in the middle class forever. Financial geniuses think about money as something you create through value. When Musk founded PayPal, he wasn't trading his time for money. He was solving a massive problem that millions of people had, and the money flowed naturally from that solution. When he started Tesla, he wasn't trying to make money from electric cars. He was trying to accelerate the world's transition to sustainable energy. And the financial rewards came as a byproduct. This is the first mental shift you need to make. Stop thinking about earning money and start thinking about creating value. The amount of money you make is directly proportional to the amount of value you create and the number of people you create it for. This isn't just some feel-good philosophy. This is how the economy actually works. Think about it this way. If you solve a problem for 10 people, you might make a few $100s. If you solve a problem for 10,000 people, you might make a few $100,000. If you solve a problem for 10 million people, you might make hundreds of millions of dollars. The math is simple, but most people never make this connection. The second principle is even more counterintuitive. Poor people avoid risk. Middle-class people manage risk. Wealthy people create risk. Wait, what? Let me explain because this is crucial to understand. When most people think about risk, they think about losing money, losing their job, or losing their security. So they try to avoid risky situations. They keep their money in savings accounts, they stay in safe jobs, they don't start businesses. This feels responsible, but it's actually the riskiest strategy of all because it guarantees you'll never build real wealth. Middle-class people are a bit more sophisticated. They diversify their investments, they have emergency funds, they try to manage and minimize risk. This is better than avoiding risk completely, but it's still not how wealthy people think. Wealthy people understand that risk isn't something to avoid or even manage. Risk is something to create and control. When Musk invested his entire PayPal fortune into Tesla and SpaceX, people thought he was crazy. He was risking everything on two industries that had a history of destroying investor money. But here's what others missed. Musk wasn't gambling. He was creating calculated risks in areas where he had unique insights and advantages. This is the key distinction. Poor people take risks they can't afford to take, like buying lottery tickets or gambling. Wealthy people take risks they can afford to take in areas where they have an edge. The risk isn't random, it's strategic. The third principle involves time, but not in the way you might think. Most people sell their time for money. They clock in, they clock out, they get paid. But there are only 24 hours in a day, so this approach has a natural ceiling. You can't scale your time. Wealthy people understand that time is the most valuable resource, but they don't sell it. They leverage it. They build systems, hire people, create products, and invest in assets that generate value while they sleep. This is why Musk can run multiple companies simultaneously. He's not doing all the work himself. He's created systems and teams that multiply his impact. But here's the part that most people miss. The wealthy mindset isn't just about leveraging other people's time. It's about leveraging other people's money too. When Musk needed funding for Tesla, he didn't just use his own money. He raised capital from investors, took government loans, and used pre-orders from customers. He was building a multi-billion-dollar company, largely with other people's money. This sounds risky, and it is. But it's also how all major wealth is created. You can't build a billion-dollar company with your own savings. You need to learn how to attract and deploy capital from others. This requires a completely different skill set than just being good at your job. The fourth principle is about opportunity recognition. Most people see what is. Wealthy people see what could be. When Musk looked at the automotive industry, he didn't see successful car companies. He saw an industry that hadn't had a major innovation in decades. He saw environmental problems that needed solving. He saw technological possibilities that others were ignoring. This is pattern recognition at the highest level. Wealthy people train themselves to see opportunities where others see obstacles. They look at inefficient systems and see business opportunities. They look at emerging technologies and see applications that others miss. They look at changing demographics and see new markets. But here's what's really interesting. These opportunities aren't hidden. They're hiding in plain sight. The same information that wealthy people use to make fortunes is available to everyone. The difference is how they process that information and what they do with it. Let me give you a specific example. In the early 2000s, everyone knew that climate change was becoming a major concern. Everyone knew that gasoline prices were volatile. Everyone knew that battery technology was improving. But only a few people connected these dots and realized that electric vehicles were about to become viable. Musk was one of those people. The fifth principle is about failure, and this one might surprise you. Poor people are afraid of failure. Middle-class people try to avoid failure. Wealthy people seek out failure. Again, this sounds backwards, but let me explain. When most people fail, they see it as evidence that they're not cut out for success. They become more cautious, more conservative, more risk-averse. But wealthy people understand that failure is information. Every failure teaches you something valuable about what doesn't work, bringing you closer to what does work. Musk has failed more times than most people have even tried. His first company, Zip2, almost went bankrupt multiple times. PayPal faced numerous near-death experiences. Tesla was on the brink of collapse for years. SpaceX exploded rocket after rocket. But each failure taught him something crucial about building successful companies. This is why wealthy people often start multiple companies, make multiple investments, and take multiple shots at success. They understand that failure is part of the process, not the end of the process. They build failure into their strategy. The sixth principle is about money itself. Most people think money is the goal. Wealthy people think money is a tool. This distinction is absolutely critical because it changes everything about how you approach wealth building. When money is your goal, you tend to make short-term decisions that maximize immediate income. You might take a higher-paying job that you hate, or you might cut corners to increase profit margins. But when money is a tool, you make long-term decisions that maximize your ability to create value. Musk could have sold Tesla years ago and walked away with billions. Instead, he's reinvested almost everything back into the company because he sees money as a tool for achieving his larger mission. The money isn't the point. The mission is the point. The money just enables the mission. This shift in thinking is liberating because it removes the emotional charge around money. You're not desperately chasing money. You're strategically deploying it. You're not afraid of losing money. You're calculating whether the potential return justifies the risk. The seventh principle is about competition. Most people try to compete by being better at what everyone else is doing. Wealthy people try to compete by doing what no one else is doing. This is the difference between competing in existing markets and creating new markets. When Musk entered the automotive industry, he didn't try to build a better gasoline car. He built a different kind of car entirely. When he entered the space industry, he didn't try to build better rockets using traditional methods. He rebuilt the entire approach from first principles. This is what economists call blue ocean strategy. Instead of fighting for market share in bloody red oceans, You create new blue oceans where you're the only player. It's harder to execute, but the rewards are exponentially higher. The eighth principle is about learning. Most people learn to get a job. Wealthy people learn to solve problems. This changes everything about how you approach education and skill development. Traditional education teaches you to follow instructions, memorize information, and perform well on tests. This is useful for getting a job, but it's not useful for creating wealth. Wealth creation requires creativity, problem solving, and original thinking. Musk dropped out of Stanford after 2 days because he realized that the problems he wanted to solve weren't going to be solved in a classroom. They were going to be solved in the real world with real customers facing real challenges. This doesn't mean education is worthless. It means you need to approach learning differently. Instead of learning for the sake of learning, learn for the sake of solving specific problems. Instead of accumulating credentials, accumulate capabilities. The ninth principle is about focus. Most people try to do everything. Wealthy people try to do one thing extraordinarily well. This seems obvious, but it's actually one of the hardest principles to implement because it requires saying no to good opportunities so you can say yes to great opportunities. Musk appears to be involved in many different ventures, but if you look closely, they're all connected by a common thread. Tesla, SpaceX, SolarCity, Neuralink, and even his tunnel company are all focused on solving fundamental problems with human civilization. They're not random investments. They're components of a larger vision. This level of focus allows you to develop deep expertise, build network effects, and create synergies that wouldn't be possible if you were scattered across unrelated activities. It's the difference between being a generalist and being a specialist in high-value areas. The 10th and final principle is about mindset itself. Most people have a fixed mindset about money. They believe their financial situation is determined by factors outside their control. Their background, their education, their connections, their timing. Wealthy people have a growth mindset about money. They believe their financial situation is determined by factors within their control. This single shift in perspective changes everything. When you believe your financial future is outside your control, you become passive. You hope for raises. You buy lottery tickets. You blame the economy. When you believe your financial future is within your control, you become active. You create value. You solve problems. You build assets. Now, I know what some of you are thinking. This all sounds great in theory, but what about practical steps? How do you actually implement these principles in your life? Let me give you 3 specific actions you can take starting today. First, identify one problem that you're uniquely positioned to solve. Look at your skills, your experience, your network, and your interests. What problems do you encounter repeatedly that others might also face? This could be the foundation of your first value creation venture. Second, start treating money as a tool rather than a goal. Before you make any financial decision, ask yourself, what am I trying to accomplish with this money? How does this decision move me closer to my larger objectives? This simple shift in questioning will dramatically improve your financial decision-making. Third, begin investing in assets that generate income without your direct involvement. This could be stocks, real estate, businesses, or even digital products. The key is to start building sources of passive income that free up your time for higher value activities. The wealthy mindset isn't about having money. It's about understanding how money works, how value is created, and how you can position yourself to benefit from economic growth. These principles aren't just theoretical concepts. They're practical frameworks that have been tested and proven by some of the most successful people in history. Remember, the difference between where you are financially and where you want to be isn't about luck or talent. It's about mindset. And mindset is something you can change, starting right now. The question isn't whether you can develop a wealthy mindset. The question is whether you will. If this video helps shift your perspective on money and wealth creation, make sure to subscribe for more content like this. And let me know in the comments which of these principles resonated most with you. I read every comment, and I'm always looking for ideas for future videos. Until next time, keep thinking like the financial genius you're capable of becoming.